Darryl Grater is the Executive Head for Distribution Services at Discovery Insure and is responsible for distribution across personal and business insurance lines. At the upcoming FIA Summit, happening virtually on 5 October, Darryl will look at how the rapid changes brought on by the pandemic has fundamentally changed the nature of risk, mainly due to the changes in how many people live and do business. So the reason for my chat with Darryl today is to get a high-level overview of his talk so that we can make sure that we get the people to register and to come and listen to what you have to say, Darryl. Great to catch up again.
Indeed, Rianet, it's good to see you and talk to you again. And we as Discovery, we're very excited about the summit again. We've sponsored the summit every year for quite a while now. It's an important summit. It's important to bring together advisors and brokers and just intermediaries as a whole to galvanize the intermediary force within South Africa, and really just to talk about the topics and the issues that are relevant to distribution, that are relevant to just what clients and customers expect from insurers and from brokers. And it's an exciting lineup, and I think very relevant topics. I mean, our topic for this year that I'll be speaking to the audience on is innovating for the future. And if you just consider the backdrop, I think coming out of this pandemic, the various sort of economical challenges we've had, and I guess just that impact on consumer behavior. I'm looking forward to the conversation.
Yeah, thanks. And intermediaries is a critical part of the Discovery model all over. So it's very relevant. Your talk specifically on innovation and how we do business. I think in the last 2 years, we've all not only was it the riots, the pandemic, it was the way we do business. It's how we operate, and I think it's a permanent change going forward. So talk to me about your talk.
Yeah, so I mean, like you rightfully said, Discovery was built off the back of the brokers. We started the business in 1992 as a group. Discovery Health was built off the back of advisors. Discovery Insure is no different. It's now 10 years old, and over 70% of all personal lines business comes from an intermediary, and 100% of all our commercial business. So this talk is relevant in speaking to brokers in South Africa in terms of what are some of these consumer trends that we're seeing. So, I mean, on a very high level, we'll speak about sort of just the habitual behavior on consumers. We'll also just sort of talk about some of the stats and the studies more recently that have guided some of these outcomes. We'll talk about the sort of advice methods that we're seeing that have evolved over this time, and kind of just where it needs to evolve to going forward, because I think consumer behavior and consumer demands also evolve over time. We'll also talk a little bit about just consumption generally, and the impact of things like technology, regulation, and ad hoc events. I think you just mentioned the recent riots as an excellent example, and we'll talk a little bit about how that is also seemingly changing consumer behavior as a whole. And we're going to go into a little bit of detail of the sort of the local South African market, as well as sort of consumer trends that we're seeing more internationally, in sort of the European and the UK markets too.
One of the articles I recently read is that the personal lines market is going to change quite a lot in the next few years. The role of the broker specifically in personal lines there's no doubt that it is going to change. What is your views on a broker maybe focusing mainly on personal lines? What needs to change?
So I think consumers sort of internationally are demanding a more immediate solution. People I don't think don't have patience to wait, for quotes for a week or two and for a broker to come sit in their lounge and meet them like they would have 20 years ago. And I think we're seeing a big sort of groundswell of digital solutions, not just by insurers but also by brokers. And I think brokers have realized that they need to be more digitally focused if they're going to maintain relevance in distribution. I think we've all seen even well-known brokerages in South Africa creating their new applications to get to the market quicker in a more digital fashion. So I think the South African consumer for personal lines will expect a more immediate sort of engagement with their advisor. I think in terms of certain segments of the personal lines market, there'll be certain segments that still do require a sort of sit down face to face or a more detailed engagement with their advisor. If you think about the high net worth space where the asset base is a bit more complex, I still foresee there being a more traditional sort of advisory role play out for quite an extended time. But when it's a single car and it's a cell phone being insured, I think we're going to see a lot more digital business as well as call center business, being driven. And I'm not saying direct business, but you're seeing many brokerages now setting up contact centers just to be more efficient in the go-to-market strategy. Integrated with social media campaigns. A lot of brokerages now are really investing in social media capabilities and understanding their target markets, their segmentation, and how that sort of translates into smart digital campaigns that work on ROI models, propensity models. And I think brokerages who understand this will definitely scale and be a lot more relevant as they compete down the line.
We haven't decided what we're going to exactly talk about, but I would like to touch on claims and the importance of an intermediary, specifically when it comes to the claim side of things. That's the one thing. And the second is that on our side, FAnews, we've received some feedback from brokers, and it's not Discovery related at all, that they were feeling a little bit frustrated with the slowness of claims from many insurers. This work from home story didn't help. I think there's some space for innovation in that area. What's your views on that?
Absolutely. It's still quite interesting to see some practices still work on paper-based forms. And besides the cost model, it's not just about the cost of the paper and the printing. It's about the efficiency. It's about the mechanics. It's the amount of time spent on paper-based claims processes. And you're seeing less of that these days. And hopefully, brokerages as well as insurers are a lot more digital in terms of the claim submission, at least. But we as Discovery have made vast inroads is we've automated a lot of our claims processing. So there's certain claims which actually require very little validation. If you take user claims or windscreen claims as an example, that's a large proportion of claims in any insurer's claims workload. And the checks are pretty basic, right? You want to make sure that the premium has been paid, the policy is active, there's no pre-existing damage on the glass, more specifically. That kind of processing is actually very easy to automate with basic AI. And so 70% of those claims in our business are automated. The client or the broker registers those claims either online or on an app or via the contact center if they want to be manual and call the contact center. And it's immediately approved just by these algorithms. But 10, 15 years ago, that would still take anything from 20 minutes to a day to approve, with some financial services providers. So that's a basic example. And I think just in terms of, basic validation, I think insurers and brokerages are understanding the value of data in terms of forensics and fraud reduction. Because, it's a small proportion of clients that are fraudulent. And it's unfortunate when you've got to now validate every claim extensively to try to filter out the small minority, of the fraudulent claimants. So when you've got good data and good analytics, and you've got really relevant and continuously improving, fraud prediction models, it allows you to focus on the problematic claims only and not keep, most claims held up by an extensive validation process. And I think there's certain insurers that are doing that better than others. And I think even brokers now understanding the value of that, because it's estimated that there's over 4 billion rand worth of fraud leakage in South Africa in terms of short-term claims. We know the market's about it. It depends on who you speak to, but say about 130, 140 billion rand worth of premium, the sort of personal, commercial, and corporate market. 4 billion rand's a lot of leakage. Yes. You take that out of the model, it's a very different premium that gets charged to clients, and you can imagine how much easier it would be to distribute that product as a broker if insurers didn't have to price that fraud into it.
Absolutely.
So claims still has, in my view, as a market on a macro level, I think claims still has a lot of potential to be to be fast-tracked and to be innovated against.
Yeah.
We're proud of what we're doing at Discovery on that model, and thankfully many of our brokers are also just witnessing that faster turnaround time.
Yeah, no, I agree with you. There is definitely space for innovation in a big part of our industry. We have, last time we chatted, we also briefly touched on the untouched market. Maybe we can, for those who haven't listened to our previous interview, talk on maybe innovation needed for the lower income market, where there is still a little bit of premium. They realize that they have to pay, but there's no education, and there's not necessarily the right products for them to at least have a little bit of insurance. We're talking the spazas, we're talking really the lower income market. And we've seen with the riots, really there is an absolutely need for both education and products. Quickly, your view on that.
So I think it's a multifaceted issue, Rianet. So in my personal view, I think financial literacy is an issue in South Africa, not just South Africa, I think in many developing countries. But financial literacy is where it starts. In my view, I think insurance, the value of savings, investing, having a bank account, the value of that needs to be taught at a more of a ground-reach level at, sort of primary and high school. I think too many people in developing countries don't actually understand the value of insurance, and that's the embryonic issue at the very foundation. I think once you've got an educated population on just financial literacy, then I think it becomes an easier market to penetrate. Because the assets are there. To your point, even in the mass market, in South Africa, there's more than 2 cellular devices per person. If you look at the number of cellular devices in the market and the population. And it doesn't matter what sort of LSM you are, generally you have a cell phone and you've got assets that would benefit off insurance. So the market is there, and I think the market and just players in the market are beginning to see this opportunity. And that's why I think you're seeing many collaborations, jumping between industries. You're seeing collaborations between insurers and banks, between retail outlets and insurers, between telecommunications, companies and insurers, because I think these opportunities are becoming a lot more visible. But yeah, we need to think, how do we scale financial literacy? I think that's, in my personal view, I think that's the bigger issue.
That's the start.
Product design, the products are out there. There's great products in the market. We've got phenomenal brokers in South Africa who are passionate about what they do, that really care for their clients. And we've got great insurers that back these, brokers. So the risk solutions are there. But I think one more challenge is also just getting distribution into these communities. Because once you've got the product and you've got the backing, you also need to get just the buy-in of that community, and that will come.
Great chatting to you, Darryl. I'm looking forward to your chat on 5 October. Why should people attend? You've actually briefly touched on it, but except for listening to you, why should people register to attend the summit?
Well, firstly, I think if you look at the lineup, if I look at the people that are speaking, there's some phenomenal people with amazing experience, people that have tenure within the industry for, sort of over 20, 30 years, people that have worked on various sides between insurer, reinsurer, regulator, etc. There's an amazing amount of just knowledge that's going to be transferred. It's also, I believe, a summit which speaks about current relevance. It's not just there to get CPD points and to speak, very broadly on just general topics. This is quite specific, this summit. And I think any advisor, any broker in South Africa who's done business over the last year will know that you can't keep doing the same thing over and over and expecting the same results. There needs to be this adaptation. There needs to be this evolution within a broker's practice. And how do you evolve? And how do you adapt if you actually don't fully understand that sort of macro and micro environment in which you're operating? Yeah. And you get that detail by attending these summits. If you're understanding the new regulatory frameworks, you're understanding your consumer behavior on a macro level. Yeah. If you're understanding where technology is going as a market, only then can you make effective decisions as a broker that impact your investment decisions, your CapEx decisions, where you invest in systems and architecture. It's through engagements like this. Yeah. So that's why if I was a broker, I would make sure I attend, come hell or high water. And we're looking forward to engaging with each and every one on the day.
Thanks, Darryl. Thank you for your time. I know you are hectic with broker roadshows and broker awards, so thank you for giving me some of your time. And I'm looking forward to listening to your talk on 5 October.
Thank you so much, Rianet. All the best to you and your team. Have a lovely weekend.
Thanks, you too.